Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we are going to be going over why I think M1 Finance is the best platform out there if you're wanting to do long-term investing, specifically long-term dividend investing. If you want to buy dividend stocks, if you want to invest for the long term, M1 Finance is the best platform out there, and I'll give my reasons why and why I think that this platform is the best stock brokerage that you can use. And I want to go ahead and use this as a reference. I have a couple articles and some couple of data points that I want to pull up here over the course of this video. This article here is titled, How My Friend Made $128,000 Without Even Knowing It. And as soon as I read this, it immediately made me think about how the investors in M1 Finance are probably a lot like this guy that we read about. So let's go ahead and read this article and give you an idea of what I'm talking about. If it weren't for my wife, I still wouldn't know about that pile of money. My friend John recently told me a crazy story over coffee, one that's 100 times more powerful than any hot stock tip. It was 1996. I was managing apartment buildings and shopping at Home Depot 2 to 3 times a week. Every time I walked in there, the place was packed. I was just getting started investing, but I knew I needed a piece of this business. John enrolled in their direct stock purchase plan, which automatically buys a fixed dollar amount of shares on a regular basis. He put in $2,500 to start and then $75 worth every single month. So let's go ahead and look at those two numbers right there. This is what's really key and what's really interesting right here. This is not a lot of money. If you're watching this video and you're seeing these charts, if you're seeing my portfolio and you say, I only have $100 to my name, I only have $500 to my name, this guy was investing $75 a month. That's more than some people's DirecTV cable bill. $75 a month is not a lot of money. So let's go further. For the first couple of months, John carefully watched his account grow. Then the newness wore off, and he forgot about it. He moved to Costa Rica and then turned his attention to real estate. After a successful career there, he and his family moved to Delray Beach, Florida in 2015. 20 years later, going over our finances, that's when my wife looked up and asked, Honey, whatever happened to those Home Depot shares? John didn't even know his password to log into his account. This is how long it had been since he had checked it. But when he finally figured it out, he was stunned at the number. It was $128,000. And when I go and look at this, I went ahead and pulled up Portfolio Visualizer, and I wanted to go ahead and punch this in myself. Let's go ahead and click Home Depot as a stock ticker, Home Depot, and then we click 100% of our investment. And let's just say that we go back from 1985. We start with the exact same example. Let's go to $2,500, and cash flows contribute a fixed amount of $75 every single month, not inflation adjusted, no rebalancing. And if we look at this, the compounded annual growth rate since 1985 for Home Depot was a whopping 25.46%. And if you were to do this for 45 years in a Home Depot, right now your portfolio would be sitting at about 6.7 million. And so if you just even look at a shorter time period, just in the last 10 years, just to give you an idea of what this guy is looking at, this is how wealth creation happens. It is investing into stocks, into great companies, and just completely forgetting you realize them. If you were to do that just over the last 10 years, you'd have 70,000. And the reason why I think this makes me think of M1 Finance is that this company is directly focused towards long-term investors. This company has very quickly grown from just a startup with hardly anybody using the platform to quickly they now have over $2 billion of assets under management, including my little piece of the pie right here of about $8,000. So when people invest in M1 Finance, people are focused on the long term. And I want to show you how this does not relate to a lot of regular investors. Okay, let's just go to Google right here and let's just pull up a Google search and let's just search, let's just say Coca-Cola stock. Let's just search KO stock. When we look at their stock price, if you own, for example, let's say the 26 stocks that I own in my portfolio, okay? If you own these 26 companies and you want to buy a piece of the company, here's what you do. You see this auto invest button? Ready for this? Click, and then it buys all the stocks that you need to know. I'll go ahead and show you an example of this live. Let's go ahead and turn off auto invest, and let's pretend like I'm going to sell one of my companies. So let's just say I want to sell $100 worth of Discover Financial Services, okay? Let's go to sell. Let's say $100, sell orders, continue, and let's click confirm sell. And I'm not actually going to sell this. I'm just going to pretend just to show you guys for an example. And now I have $100 worth of orders. So if I turn on auto invest and I go right here, it auto populates these buy orders. And the top 7 companies that are most undervalued are going to be bought at the end of this trade window. Now I want to show you something. Now what's really interesting here is that it's only buying 7 companies, not 26 that I own. So it's buying stocks that are most underweight, that are most undervalued. So this always finds a way for M1 Finance to find the most undervalued companies and always get the most dollar amount for your value that you're selling your shares at. Now here's what's interesting. If you look, this is nothing related to the $100. Okay, for example, let's just say, we'll use Home Depot. Why not? Home Depot, for example. Home Depot in my portfolio makes up 3% of my portfolio. So that means for every $100 I invest, about $3 should go into the company. Well, in this case, we have $3 that should be going to the company, but instead it's investing 4.32. And that's because Home Depot has been hit roughly hard recently because of the recent downturn in the market. And Home Depot is pretty undervalued based off of these shares. So M1 Finance recognizes this and buys it at a cheaper price. See, over the last couple months, it's went pretty much nowhere. So you're picking up prices at a cheaper price compared to the other stocks in your portfolio. Now, if you look at this and you see with other companies, if you wanted to use a different brokerage and invest in, say, a Coca-Cola stock or even Home Depot, we'll look at Home Depot stock, for example. If you want to invest in Home Depot stock, you have to look at all 26 of the companies that you own and say, okay, I want to pick that one. You might be picking the best company in your portfolio, you might be picking the worst, you might be somewhere in between, but you have to manually do separate buy orders, buying each and every one of these companies, looking at stock prices, doing the research, and overall it's just a big time consumer. When you do M1 Finance, you can turn it off, or if you want to buy stocks, you literally one click. One click of the button, you have all these buy orders already produced, and it changes by the minutes, by the movement of your stock prices. And then I will look at this. When I look at articles like this, Vanguard says the median 401k withdrawal was $12,000 amid the coronavirus. The CARES Act allows 401k and other retirement savers to withdraw up to $100,000 through December via a coronavirus-related distribution. Vanguard investors who took money out took out a median of $12,000. About 4.5 of Vanguard 401k investors took a distribution. So think about how much wealth was lost for these people that sold out during the downturn. Now, since this is eligible through December, and while this article is being posted in November, we can likely assume that a lot of these withdrawals were being taken out at the absolute bottom, at these prices right here. Now, this is really sad to see for people that are long-term investors ruining their retirement. But if you act just like someone like this guy who invested in the Home Depot, just bought $75 worth of the company, fell asleep for years and years and years and forgot about it, he woke up with $128,000 in his account, only investing a whopping $75 a month. That is not a lot whatsoever. $75 a month, you think if there's 30 days in a month, he's investing a little bit over $2 a month. That is incredible. What's important here though is that he never sold, because that is the most important part of this article. Investopedia writes an article that is perfect for this, and they pretty much wrap it up all in one bullet point here on the key takeaways. The main reason to buy and hold stocks over the long term is that long-term investments always outperform the market when investors try and time their investments. They said that the average return for people who try to time the market is roughly 2% average returns. And that is because people are constantly selling out of stocks. They can't pick a strategy. They don't have their emotions in order to be able to hold throughout this downturn. And the reason why this went down so far is because people like Vanguard investors who had probably tens of thousands, hundreds of thousands of dollars in their 401ks are pulling them out at rock bottom prices. And look how that's performed for them. If they would have held, they would have not only got all of their money back 6 months, 8 months later, but they would have got all their money back and then some. They would actually be up to the highest point in their portfolios to where they've ever been. So this is just once again why I focus on long-term investing and say why you should not sell out on any downturns whatsoever. And my prediction is that if you invest with M1 Finance, is that you will have a much better advantage traditionally compared to a lot of other brokerage out there that do not have their dynamic investing platform. Now let's go ahead and go to backtest portfolio, and I wanted to try something here. So let's just go ahead and look. Let's just say you're starting with $1,000, and let's say you invest, say, a small amount, $100 a month. No inflation adjusted. You're investing $100 every month, and you're no rebalancing, and you're wanting to compare this to the S&P 500. Now, what I'm going to do is I want to compare this to, say, just a lot of the blue chip stocks in my portfolio, companies that have been around for decades. So that way we can go back really far out, and I want to go back all the way to 1985, as far back as it'll let me go. And let's just pick some of the top names out there. So like Home Depot, let's just say Coca-Cola as another one. Let's just say Pepsi as another one. I'm looking at stocks that have been around a very long time. Johnson & Johnson, let's add that one. Okay, let's also add Procter & Gamble. Let's go back to my portfolio here. Let's also add, say, JP Morgan Chase and Realty Income. Let's add JP Morgan, JPM, and let's add Realty Income. They've been raising their dividends for a very long time. And let's go ahead and add 3M and Kimberly-Clark. Those stocks have been around a very long time. So let's go ahead and add 3M. And let's add Kimberly-Clark. And let's pick one more blue chip stock that have been around a long time. So let's go ahead and add McDonald's. These are stocks that a lot of you guys probably already know about and see every single day. So I did not handpick these stocks, well, just so you know ahead of time. I have no idea what these numbers are about to produce. I have no idea how good it's about to look. I just want to see the performance if you look comparing this to my portfolio compared to the average market. So this is with dividends reinvested real quick before we show the number. It's going to compare this portfolio if you were to own all 10 of these stocks at an even 10% each, reinvest all the dividends going back to 1985, starting with $1,000 and investing $100 each month. If you were to do this, the dividend portfolio would end up at around $171,000. Compared to just investing in the S&P 500 at $121,000. Now, regardless of which one you pick, I don't care if you're a dividend investor, but this just goes to show, once again, if you're investing for the long term, if you can invest just a measly $100, you can get your portfolio to 6 figures if you're investing for the long term. And if you can invest a lot more than that, like for example, right now, I'm investing 4 times that amount. I'm investing roughly $100 a week. So if you can invest more than that, it's almost inevitable that your portfolio will get up to $1 million if you never sell your investments and just wait on them to compound years and years and years and years out. And that is how I've continually grown these charts. And this is once again why M1 Finance, in my opinion, I think will give a big benefit to dividend investors, because I think that this chart will probably look even better if you were to hypothetically do this through M1 Finance. If you were continually buying stocks, like we gave the example, if you sit on auto invest and you continually buy stocks that are only undervalued, this gives you a massive advantage to people that do not have this access to their brokerage. So overall, guys, thank you for watching all the way to the end of this video. I hope this gave you an insight to not only the brokerage itself with M1 Finance, but what I really wanted to focus on was the mindset, because it's stories like these that really get me excited for investing. And guess what? Right now, we started with $1,500 in the portfolio, and today we're approaching $8,000. Well, guess what, guys? If you want to subscribe to the channel and you want to follow along with me when I'm filming these videos 3, 4, 5, 10, 20 years from now, I intend on doing YouTube for the long term. Who knows how big my channel will be by then, but I fully intend to have this portfolio get to $1 million. Now, I know right now it might seem like a crazy idea. It might seem something that's not even remotely realistic, but I guarantee you one day I'm going to have 2 commas in this portfolio. So thank you guys so much for watching all the way to the end. I'd invite you to subscribe if you're interested in signing up. And if you want to get signed up with M1 Finance, like I said, this referral link is down in the description. You can get signed up, and if you deposit $100 to the platform, you get $10 just for signing up. And there's no cap for the amount of people that you can refer. So if you want to sign up your brother, your sister, your mama, your daddy, your best friend, whoever you want to sign up, go ahead and do that if you're interested. But thank you guys so much. And if you want to invest in the stocks that I own, the 26 companies I own, that's also down below. But thank you guys so much, and I'll speak to you guys next time.